Okay, now we have AM rally, PM reversal. Institutional order flow is bullish, and this is seen on daily and 4-hour, but it's underneath, for instance, a 4-hour higher time frame premium PD array. So in other words, price has been going up. It's yet to fulfill a completion of a bullish run, but very close to where we are presently, there is a higher time frame premium PD array, and it could be seen on a 4-hour or it could be a daily, but the AM session will start off bullish until it hits the higher time frame premium PD array, which causes the intraday market reversal. The AM trend returns to a discount array, then rallies. The lunch hour consolidates with shallow retracements. The PM trend runs the lunch hour highs, then reverses into the close, or it runs the intraday high, then reverses into the close. So it could create a higher high in the PM session that was seen on the intraday, or it could just simply run above the lunchtime hour and then reverse there. So in other words, it could create a lower high that was formed in the New York AM session. So don't think that it has to create, like as this diagram showing here, a higher high in the PM session relative to the AM session. It could just be a higher high relative to what was seen during the lunch hour, which would create a failure swing on the run into the AM session's high. And the PM trend can resume higher if the AM session discount array that it rallied off of equals a higher time frame discount array. So we could see it recapitalize that same level once it trades down to it in the PM session. They can recapitalize that discount array and send it higher. If there is no higher time frame discount array that's saw price rally away in AM, say for instance maybe it was a 60-minute, okay, or a 15-minute discount array that caused the AM session rally, then obviously we could look for price to continue lower. But if that New York AM session discount array happened to be a 4-hour or a daily or a weekly discount array, or say like an instance of order block that's bullish from a higher time frame, if it trades back down to it in the PM session, it could reverse there and trade higher and resume going higher. The filter is if it's not a 4-hour or a daily or higher than that discount array, expect it to trade through it and go lower. All right, we're looking at the AM rally, PM reversal, projected range. In the AM session, we're going to be looking at the 3 averages, NASDAQ, Dow against the S&P, and we're going to be comparing the index SMT on the lows. So we're going to be looking for a divergence. One of them will fail to go lower. That will signal the time to be a buyer of the E-mini S&P for the New York session. And we're going to be relying on time of day, holding until we get to very close to 11 o'clock or just past 11 o'clock as we get into the lunch hour. And again, ahead of noon, many times we'll see a little bit of a profit-taking retracement. And then in the afternoon, we're going to be looking for a rally to sell into. And we're going to hold that until we get to time of day and price. So we have to refer back to that discount array in the AM session that caused the initial rally. And if it blends well with a higher time frame discount array, obviously we expect a short-term bounce, maybe back into consolidation or resuming higher to take out the daily high. But if the daily AM session discount array is not a higher time frame discount array, we'll look for continuation on the downside and take out the intraday low. In the afternoon, that high is going to be a 15 to 60 minute premium PD array. In the AM session, in this case, it creates a lower high than that which is formed in the PM session. If that short-term high forms before lunch, if it's below a 15-minute or a 60-minute premium array, then we're going to be anticipating, before it even happens, the initial move outside of the London lunch around 1 o'clock in the afternoon New York time, then it will rally up to the 15 or 60-minute premium array, and then anticipate a higher time frame market reversal to fall as indicated in this diagram. Now, I know what you're thinking. 15 is not a higher time frame, and neither is a 60-minute. But we're going to be looking for a overlap or a nested premium array that's seen on the 15 or 60-minute and daily or 4-hour. So the higher time frame confluence with nested ideas of premium array would be our catalyst for this PM session reversal. Okay, the AM decline, PM reversal. Institutional order flow is going to be bearish, but it's yet to trade down into a discount PD array on a higher time frame. So prices above a higher time frame discount array from a 4-hour or a daily basis, or even higher. AM trend returns to a premium array, then declines. The lunch hour consolidates with shallow retracements. The PM trend runs the lunch hour lows, then reverses into the close, or it runs the intraday lows, then reverses into the close. So again, like we just said, with the AM rally, PM reversal, this day we can see the lunch hour lows can be violated or traded down, run out the sell stops for any short-term lows created during the lunch hour, and then rallies in the PM session. Or the PM session, as shown here, it runs out the low formed in the New York AM session, then reverses and trades higher. The PM trend can resume lower if AM session premium array equals a higher time frame premium array. So everything we just mentioned for a AM rally PM reversal in relationship to what the higher time frame array may be, if the AM session premium array that it trades up to and sells off from, if that equals a higher time frame 4-hour daily, weekly, or monthly premium array, it can be returning back to it in the PM session to recapitalize that same level and then go lower and resume lower. If that's not the case, and we don't see that higher time frame 4-hour daily or higher premium array that the New York AM session keyed off of before it dropped down, then we can expect price to continue through and make an attempt to run higher. AM decline, PM reversal. In the morning, we're going to be looking for the index S&T divergence on the highs, going from London session into the 9:30 a.m. equities opening. One of them bearish. Then one of those three indices will be the bearish divergence, indicating a New York AM session decline. We're going to be holding again for very minimum 10:30 a.m. and closer to 11 o'clock. At 11 o'clock, anticipate some measure of consolidation or retracement going into the lunch hour. In the PM session, we anticipate a run on the daily low or the low seen in the lunch hour. Now, again, we hold on to the later portion of the day. At least try to aim for holding till 3 o'clock bond close, New York time, if at all possible. If it gets to the premium array that saw price decline from the AM session, we could see price resume and go lower. Or if that AM session premium array is not a higher time frame premium array, we can anticipate further upside and then the intraday high being taken out. In this diagram, the AM session low is suggesting the low forms above a 15 or 60-minute PD array, and therefore a lower low could be expected in the afternoon, trading down into the 15-minute or 60-minute PD array. And that would cause our, again, reason to justify a nested discount array. So if that discount array in the afternoon forms at a 15 or 60-minute discount array, and it is also a nested higher time frame 4-hour or daily discount array, that further bolsters the idea that this is going to be a market reversal in the afternoon, and we can trade it accordingly.